Hey, what's happening, guys? What's going on? YouTube got an interesting story for y'all today. Amazon has launched a subprime credit card, and essentially they're going to be charging you 28% to use your own money. So let me kind of briefly explain how this works, and then we'll kind of delve into this article and also kind of talk about Dave Ramsey actually did a video on this earlier. I cover a lot of Amazon news, whether it's Amazon kind of expanding their own kind of delivery service, Amazon buying planes, Amazon using robotics in the warehouses. When Amazon is in the news, I kind of like covering Amazon stories because, I think we all use Amazon as buyers, probably definitely, and as sellers, a lot of us as well. So Amazon has launched this subprime credit card. It's a prepaid credit card, and how it works is you can load it with, I believe, $100 is the minimum, $1,000 is the maximum. And Amazon will then give you a credit line for whatever you put in. So if you put $1,000 into the Amazon credit card, Amazon will give you a credit line for $1,000. Now, so you're essentially using your own money, right? There's no risk to Amazon because you're paying the money up front. So you got $1,000 in this pool. I mean, essentially it's like a debit card, except they're charging you 28% interest on your own money. So you load your card up with up to $1,000. You put $1,000 on it. If you spend off that $1,000 and you don't pay it off within 30 days, Amazon is going to charge you interest. Now, the interest on this card is 28%. I believe the average credit card interest is 22% among store cards, so say like a Macy's card, an Old Navy card, etc. The average interest rate on store cards is 25%. Amazon is at 28%, and you're using your own money. Amazon is charging you 28% to use your own money. So I actually saw this initially. I heard some rumblings about this. I saw some articles, and then I follow Dave Ramsey's YouTube channel now. Dave Ramsey is, I don't necessarily agree with this, but Dave Ramsey is very against credit cards. Obviously, Dave Ramsey, kind of caters to an audience that has no financial sense and is irresponsible when it comes to finances. So he teaches kind of a very, very strict method of basically dumbing it down so much that people can't get themselves in trouble. So Dave Ramsey encourages everybody to use no credit cards, to have no credit score. In this day and age, you have to have a credit score. He then shuffles everybody off. And I don't mean to talk shit about Dave Ramsey. I love Dave Ramsey. I listen to his podcast. I like his YouTube channel, but I don't really agree with this credit thing. Then he sends everybody over to Townstone Financial, which is a mortgage company that he gets huge kickbacks from. And Townstone Financial manually underwrites loans. So basically, they're able to give loans to people who have no credit score. So, I think credit cards, they can get people in a lot of trouble. In my early 20s, I got in a lot of trouble with credit card debt. But ultimately, there's credit card rewards. You get chargeback protection. If you ever happen to be the victim of a hack or somebody gets a hold of your credit card number, it's a lot easier of a situation to deal with a credit card when the loss is on paper than when it's actual real money coming out of your bank account. I remember at one time, one of my debit cards got used like in the Philippines or Thailand or something like that. And my bank was telling me it was potentially going to take upwards of 45 days for them to investigate before I'd get my money back. So, at the time, I wasn't super scraping by, but I wasn't doing that well. I mean, maybe I had $1,800 in my bank account. They'd cleared everything out. And my bank's telling me it's going to be 45 days until I can get my money back. Well, I had to pay my mortgage. I had to get, I needed gas to get to work. I needed money for food. And if that loss were on a credit card, it's just a paper loss. It really, they're not going to charge me interest. Eventually, it's going to get straightened out, but I still have all my money. So, for a lot of reasons, I don't agree with his not using credit card strategy. But let's dive into this article. Amazon launches a credit card for the quote-unquote underbanked. And I'm actually kind of surprised. Some people have been hammering Amazon for this move and kind of talking about what a fucking dumb credit card this is. But a lot of the media is kind of like, oh, well, Amazon's trying to help the underbanked and stuff like that. What's really unfortunate is poor people in this country really get hosed. Everybody takes advantage of poor people, from the payday loan industry to, short-term stay motels to just, if you're poor, everybody's fucking you, and it's really hard to get out of poverty. And this is just kind of another example of taking advantage of the poor and people with bad credit. Is there anything good about this card in terms of allowing you to build your own credit? I'm not really sure how that's going to work out. I know I had a buddy who did one of these prepaid credit card deals. secured credit card deals to try to build his credit back up. When we were younger, he'd bought like a BMW 325 at 18% interest. Got himself in a world of debt, a bunch of trouble, wound up getting the car repoed, and was trying to build his credit, so went and got one of these prepaid debit cards, which was kind of a ripoff, but the whole intention was to build his credit back up. And the company that he used to build themselves as a company that was going to help you build your credit back up through using their card, they didn't even report to the credit agency. So he's paying all types of fees to have his money direct deposited onto this prepaid card. Every time he uses the card to buy something, there was some kind of fee, like a quarter per transaction or something. They charge him higher than normal ATM withdrawals. And after all of this and all this kind of wasted money, they didn't even report to credit agencies, so it didn't do anything to improve his credit. But Synchrony Financial and Amazon are partnering on a credit card for those who might not have good enough credit to get one otherwise. One thing I'll throw in before we get into this, I think Amazon does extend some of their like cashback benefits to you on using your card to buy items from Amazon Prime, but still, you know, no matter which way you shake it, this isn't a good credit card to have, and nobody should get it. Amazon Credit Builder lets users build credit through a secured credit card alongside budgeting tools and tips. It allows people eventually to graduate to another Amazon store card once they've established credit. It's putting credit in the hands of people in a responsible way, said Tom Quindlen, Synchrony Executive Vice President and CEO of the bank's retail card operations. Amazon is finding a way to get its rewards cards in the hands of more people. The e-commerce giant partnered with publicly traded Synchrony Financial to launch a Amazon Credit Builder program that lends to shoppers with no credit history or bad credit who would otherwise be exempt from Amazon's loyalty cards. Now, Synchrony Bank isn't lending you money. This is your own money that you put in up front. They're lending your own money to you for a fee. They're not lending you anything. The card has the same perks like 5% cash back on purchases that come with the popular Amazon store card, which Synchrony also powers. These reward cards incentivize shoppers to use Amazon instead of an alternative and helps drive loyalty within its customer base, Quinlan said. Banks such as JP Morgan have also bet on rewards cards that would theoretically make customers spend more money and in return bring in more interest and returns. This new Amazon card could open a door to a huge segment of U.S. buyers. According to a 2018 FICO survey, more than 11% of the population has a credit score below 550. About 4% of the population has a quote-unquote bad credit score, which according to FICO is between 300 and 499. Meanwhile, according to a 2017 survey by the FDIC, 25% of households are either unbanked, or underbanked. The program prompts users with financial literacy tools and tips to learn about building credit. For example, it might include a tutorial on why someone should pay a minimum, Quinlan said. Borrowers can eventually graduate to an unsecured Amazon credit card once they've demonstrated they can pay back the loans. Mitigating risk. Reaching further down the credit curve comes with risk, Quinlan said. They're mitigating that by issuing what's known as a secured credit card. People can deposit $500, for example, and have a $500 credit limit. The interest rate, or APR, for the starter card is 28.24%. I know I've said this about 5 times, but let me really hammer this home for you guys. Synchrony Bank and Amazon are not lending you any money. You're giving them $500 up front, and they're giving it back to you. This is like if you're an irresponsible like teenager or something like that, and your mom makes you give her your paycheck of $500, and then she doles that money out to you, and she charges you 28% every time you want to get some money back. This is essentially what's going on here. I hope this shit isn't playing in the background. Let me turn that off just in case.
1 in 4 U.S. households are actually underbanked or unbanked. That means they either don't have a bank account or have one, but still need to use expensive services like...
It's putting credit in the hands of people in a responsible way, he said. Sanford, Connecticut-based Synchrony Bank, which is a subsidiary of Synchrony Financial, also issued a co-branded card with Lowe's, Sam's Club, PayPal, Banana Republic, and other companies. The new card application sits directly next to other Amazon cards. If a customer doesn't get approved for an Amazon credit card, they'll be prompted for this offering and asked if they want to apply for an Amazon Credit Builder instead. they can eventually graduate to another Amazon store card once they've built a credit history. So, you know, if you happen to be one of these people who is prompted to get this card, absolutely don't get it. This is a huge ripoff. Just use your own money, because that's exactly what this credit card is doing. If you want to build credit, there are other ways to build credit that aren't going to charge you 28% interest on your own money. You're giving Amazon a loan here. Amazon should be paying you interest, yet somehow Amazon is suckering people into paying 28 point something percent for their own money. So this was absolutely outrageous. I had to make a video about it. I'll link to this article as well as Dave Ramsey's video down in the description box below if you want to check that out. That's all I got for you guys today. If you enjoyed the video, give it a thumbs up. Hit that subscribe button if you're not subscribed, and we'll catch you on the next one.